Hello, this is Tim Lorenz. I'm with the OC Housing Talk and our podcast, if you will. Today we have Alan Mack with us. Alan is very, very well known in the area and even outside the area, in the area of finance and mortgage and lending. And he's has his own company, which is Mack Financial Services. Alan, thank you for coming today.
Thank you for having me today, Tim.
Absolutely. I have a question I've got to get out of the way because one of my mentees asked this question. I said I would definitely do it, and then we'll get into some broader stuff. But she said she's working with some people. They're kind of new into buying real estate. They're first-time buyers. And they wanted to know, could they buy a fixer and as she put it, piggyback? Is there a loan you could get with it to fix up when you buy? Is that sort of thing possible? And I don't want you to just answer for the new person, but broader. Can you do that all the way across the spectrum?
Yeah, so typically the FHA will offer, you have a 203B loan, which is a typical FHA loan, and then you have what's called a 203K loan, which are used to rehabilitate the house. So for instance, they buy a fixer for X amount of dollars. It needs work to get up to par to,
Air conditioning may need
different
some
things,
new wallboard.
Whatever it may be. They can do what's called a 203K loan. So they were very, very popular when you had a lot of listings on the market. There's no question you saw more of the FHA 203K loans. Not as many today because of inventory.
Yeah, exactly.
Being honest about it. But that's one thing they can do. Another thing is if they come in and they buy a property, and let's say they were going to put 30% down or whatever it may be, they can go and get a line of credit through their bank or a credit union. Some go as high as 90% combined loan to value. So that's taking the first being the loan to value and combining it with a second line of credit and using that money for home improvement.
So in your example with 30% down, if they could do 90, they get 20% they could use for fix-up.
Correct.
Good.
And some banks are different. So some will go up to 90%. Majority of them are up to 80% loan to value.
Exactly. And they don't have to go out and shop multiple times. You can do those at the same time, correct?
Typically, right now on the financing side, no, you can't do a first and second combo other than doing it as a purchase money. So basically, if I wanted to avoid mortgage insurance, anything less than 20% down, you're going to have mortgage insurance. So what we're seeing today is, and it's been around for a while, it's a combined loan. So you're doing a first, let's say for 80% loan to value, and you'll do a line of credit that is a purchase money second, along with it, say for the 10% or even as much as 15%, and they'll combine those two together. But that's to purchase the house, not so much to purchase and do home improvements with that home. So that's more on the purchase side. But after the fact, if they buy it, put 30% down for argument's sake, buying the property, and they decide they want to do all this different type of remodeling on the home, they can apply for a line of credit through either a credit union or their bank.
Okay.
We'll get them a line of credit.
So just to be clear, because we're down in the weeds, folks, I understand that, but it's really important for those who want to do it. So a 203K is a purchase money loan, correct?
Correct. The 203K is used by, it's an FHA purchase money loan for rehabilitation.
That means you aren't closing
rehab,
and then going a different, rehab. So you're not closing and then going into getting another loan. It's all together, and there's some things about that you would have to go and get an appraisal. The appraisal would have to estimate. You'd have to have somebody who's come in, a contractor that said it's going to cost this much. Then when the appraiser comes out, he'll look at the plans and he'll go, yeah, I get it. And then he'll say whether or not it's enough, if that's going to work, based on the appraisal of what it's going to look like. I know it's down in the weeds. I don't want to spend any more time on that one question, but I wanted to make sure that we got that one in because it was a question. And I said to all of you, if you have questions, get them to us. We'll answer them on the next one. So Diana, that one was for you. All right, so let's go back. Just to tell you, we're talking about those would, the 203 would have to be within the FHA guidelines in order to get it. We were talking about something that would cover a pretty broad spectrum. But just to show you the breadth of Alan's work, Alan, you have something that happened recently that's worth bragging. He has some bragging rights. I want him to get them out here on the table. What was it that just happened that you were written up on?
I have two parts of my business. So with Mack Financial Services, again, I've been doing this for 33 years. I've worked for all the major banks and mortgage bankers and so forth, and made them all a lot of money, I'll be honest. And I decided to go on my own last year, and I hang my NMLS license under a large mortgage broker, mortgage banker, Arcus Lending actually, and do home loans through Arcus. And then the other side of my business on my business itself is I partner up with a very close friend of mine named Ira Meltzer, who owns a company called $1 Million Plus. And what Ira does is Ira basically works with very affluent, high net worth clients, mostly multimillionaires and billionaires. And we help procure financing for them. So instead of working for the lender, we'll call it, like most mortgage advisors do, we work for the client. A little bit different. It's a paradigm shift, no question. And they sign a contract with us. And what we do, we take their package and we shop them with the banks. And it's so funny behind the scenes is, you have these banks. You've got the major banks that we all know of. And there's a lot of private banks out there that are looking for assets for high net worth clients and so forth. And they will literally give this a loan away for virtually nothing. So we're getting rates as low as 1.875, 2%, 2 1/8 on 10-1 ARMs, interest only. And we just procured the largest home loan that I know of in the U.S., $83 million. It was in Bloomberg about 3 weeks ago. They did an article on us. We've been mentioned in LA Times, MPA, a few other periodicals out there. So yeah, it's definitely worth bragging about. It definitely hit the press in a big way. It's amazing how many high net worth clients you do one for one, and they refer 3 more to you. So it's kind of like the inner circle. But we work a lot with Hollywood, many celebrities, a lot of the major teams such as Major League Baseball, NFL, NBA, and so forth, whether it's the owners of a team or some of the players themselves. But we have really made a name for ourselves, and I'm really proud to say that I'm glad to be part of that team.
Absolutely. But one of the things I want to tell you is he's working on some that are higher than that. I won't go into numbers because that wouldn't be fair to the client, but I know he's working on some big stuff.
Yeah.
So he does big, he does little, he does everything in between. And by the way, you could give advice to somebody who was calling in if they were in another state, right?
Absolutely. I'm personally able to do loans in California if I'm under my NMLS license doing loans in the state of California. I'm licensed here. The company I hang my license under is licensed in almost 30 states right now, which will go under another loan officer that's licensed in that state. But if it's any type of advice or financial information that they need, I can help or at least direct them in the right area to answer their questions for them if I can't do it for myself.
So you can do this one of 2 ways. If you have a question, you can always send it to the Elite Home Sales team, and you'll see there at the bottom our phone number and how to contact us. But we'll also put up Alan's phone number and how to get a hold of him. But I'm going to ask him to do that one more time. Mention the name and the telephone number, so we're sure to get it out there and they're not going to be missing it.
Sure. So it's Mack Financial Services. If you Google me, you'll see I literally am on the front page of Google all through it. My phone number is 949-929-1091. My email address is Alan, ALAN, at Mack, MACK, F like Frank, S like Sam.com. So that's Alan at MackFS.com. And believe me, I tell you, if you call me, and the majority of times I pick up my phone. If I don't, I get right back to you. So,
me too. Anyway, FS is financial services. If you didn't figure that out, I just thought I'd help out. Anyway, it's been a joy working with Alan. Alan and I met a couple of years ago. And you have to understand, as a real estate agent, we talk to a lot of people. I mean, let me tell you, lots of brokers and lenders and banks come in and they want to talk to us. And I can tell you, the most important thing a real estate agent has to have is somebody they can rely on. Somebody that's going to do the loan or tell you they can't do the loan, and not just carry people along telling them they can do it and then it falls apart. That's horrible. So I've got to have people I can depend on. I've always had that. Close your ears for a second. The guy that was my go-to guy for years retired. So I was looking for somebody, and Alan came along. I looked into him, and obviously he's got the background. You can look into his background too. Google him, you'll see. So again, thank you.
You're welcome.
Let's kind of move on. One of the things that we're seeing, and I want to hear from you as a lender, how many across the U.S. I think we heard this morning it was what 51% roughly, or multiple offers.
Yeah, at least 51%. What we're seeing right now across the United States is we have extremely low inventory, as we're all aware. I think there's just over 1,000,001 homes listed in the entire country.
And in Orange County, it's 22,000 or 2,200. I'm sorry.
About 2,200, I was going to say, because some cities have 3 listings, 5 listings, 8 listings. It's just, I've never, in 33 years doing this, I have never seen this before. The market is booming, as we all know. If you have a home and you list it literally before the ink even dries in the listing agreement, it's going to be sold. I guarantee that. And you're probably going to get over asking price. In fact, they found that over 50% of the offers that were accepted were over asking price. Some markets heavier than other markets. I mean, I know this market in Orange County is a very hot market. Phoenix is one of the hottest markets in the United States. Las Vegas, hot market again. Seattle's another hot market, absolutely. We saw last year over 20% appreciation in many of these areas. Right now in Orange County, we're seeing good 1 to 2% appreciation per month right now. Never seen that before, ever. But it's just a crazy market. And I've been asked the question, why is this market so crazy right now? What's going on? What happened? I'll share a little quick story on this. So when you look back in time, I'm a baby boomer. And, baby boomers came to, they're from 1945 to 1964. And baby boomers started coming to the age around the late 20s, early 30s, when they have a family, that type of thing, in the late 70s, going in, about 78, 79. The housing market exploded. Appreciation took off like wildfire. Crazy appreciation. And the reason being is because the flood of the baby boomers that were coming to market that needed a home. And of course, there weren't enough homes at that time. They had to build more homes and so forth.
I got into it at that time. That's what fired me up to like real estate because I grew so fast. I mean, it was insane.
Yeah, so that was back then. So you fast forward today, the largest segment of the market today, the millennials. And again, you look at the millennials, 81 to 95 or 96, somewhere in that area. Range, but they're again coming that same age group that the baby boomers were coming to back in the late 70s, and I was saying this a couple years back at your meetings actually that if you're going to go after any market, go after the millennials. That's the fastest growing market. It will be the fastest growing market, and that's what I would focus on, and that's what's happening today. So there's such a housing shortage right now. Even with rents, I mean, it's tough right now. You can find rental properties. So they're even bidding on that now in some instances. So it's become really, really a challenge for housing. So the builders, unfortunately, when they were going through these lulls and back in 2008, when we had the mortgage meltdown, we'll call it, a lot of builders pulled back. They retracted. And so we're behind the 8 ball when it comes to building homes. They're starting to do it now and trying to get caught up, but they're way behind. I think in Orange County alone, I think we're short 30,000 homes from what I understand.
So what is the time frame? Do you know? If you don't, it's okay. Say I don't know. Do you know what the time frame is from the time they say, okay, we're going to buy this ground and we're going to build a tract of homes, big tract of homes?
It could take about 5 years.
5 to 7.
5 to 7 years, yes. So
to go from I found it, I know I'm going to do it, to getting through all the regulation, that also has something to do, just so you understand, because you're not in the market like we are. It affects it when you have all these layers of things they have to get done. So it's not they buy it and the tract pops up, 6 months later. It's a long time between the acquisition to the build.
And the other problem we have right now, of course, is inflation. And we've seen that's played a big part. I mean, look at lumber today. The cost of lumber. It is absolutely insane. Now you've got builders are saying, you know what, I don't know if I can build that house because I can't build it for what I wanted to build it for. Now I have to increase that price by 20% or 25%. So builders are starting to take a second look at building new homes now because of the cost of labor, materials.
Which will make effectively, for those of you who own your home and thinking about selling it, that means there's even more upward pressure. So we have upward pressure of the millennials, I'll get it out. The millennials, we have the upward pressure based upon low interest rates. We have the upward pressure based upon COVID. People weren't out, so they're coming out. We have so many pressure points pushing the market up. But just because you could go literally pop a site in your yard and sell it quickly doesn't mean that not having a good agent that knows how to deal with a market like this, that you shouldn't have it.
Well, that's important. It's like, I've been asking, why do I need a real estate agent? Why don't I just, put it for sale by owner, right?
Yeah,
We call them FSBOs in the
exactly.
market, right? I'll just put my own sign outside. I go, the liability that you're taking upon yourself is huge, right? And you know that. A real estate agent's fiduciary responsibility is to that, listing side if they've got that, or
That's
the
right.
buying side to purchase it. But, when you hire a real estate agent on the listing side, you really are protected overall. You're under, for instance, you being with broker with Keller Williams, working for Keller Williams, you're protected. They've done their due diligence. They've got their ducks lined up. They know they're not going to open themselves up for a lawsuit.
But even more than that, and this is something, by the way, many, many years ago, I remember that I had a group of people. I was calling, it was for sale by owners. And I'm on the phone talking to them. And I talked to two of them in a row, and they said, "Are you kidding? I could stick a sign in the ground and I can sell it in a day." And so I got off the phone because I was having no luck, and I thought, I better think this through. What do I have to offer? Anything? And I didn't come back with a liability because everybody comes back with that, and some people think you're just trying to scare them. Even though, he's not a salesman as far as real estate. He'd probably be more trusted than if I was.
I don't sell real estate. So.
That's right. But when I went back to him and I said, "Do you ever stop to think of how much it costs you? Because if you put it in the ground, you don't have the reach we do in advertising. You can't hit the market the way we can. You're not going to get the multiple offers we will. You may get one or two, but you don't know how to handle those either." So I said, it can cost you at that time, and this is going quite a ways back, 20, 40, 60, 100,000. It's even more than that, depending on your house, where you're at. So if you don't have somebody who can marshal you through it, it actually costs you money, and you think, no, I sold my house 50,000 more than the guy down the street a year ago, and you're still not at market value.
Absolutely correct. And on top of that, you have a team. You have your escrow people, you have your title people, you have other people that are part of that transaction. So if you're going to sell it for yourself, you got to find an escrow company that you can rely on. You and I know there's some shady companies out there. There's some scams going on right now with wiring, where they wire their funds and it goes into someone else's account and not the account they thought it was supposed to go in. So there are fiduciary responsibilities with the escrow companies. They are the neutral party to handle the transaction. There's a lot of risk. I just be honest. I wouldn't want to list my house myself, and I'm in the business 33 years. In the mortgage side, I wouldn't list my house myself. There's no way I would hire a real estate agent to list it for me, even though I know it would sell in a second. It'd be gone, But there's too much potential liability. Along with the fact is that, when you go to sell a house, how do you know that client has been really pre-approved? How do you know they really have the money? How do you know they're really legitimate and it's not somebody else buying the property and they're acting like they're the one buying the property? You don't know that.
You're setting yourself up for a scam. For those who don't know, haven't seen all my podcasts, I used to run the homeowner fraud division for Los Angeles County. It was part of Consumer Affairs. I am here to tell you that when things get this hot, there are lots of scams
Absolutely.
going on. Really watch out, and especially, and this is a lecture I used to give, and it was this: if it sounds too good to be true, it is. Not it may be. No, it is. If it's outside the zone, there's something wrong, and they're going to get your money, and not you're going to end up with an empty bag.
Absolutely.
And you got to be cautious. Please be careful, people. And you can pick up the phone. Again, you can call Alan Mack. He's terrific at telling you what's available out there, what financial stuff is out there. Give me a call. Only 50 years in some way in this industry. I'll say it. I used to speak for a living. Okay. Anyway, in this industry, and we have the answer. And we don't have all of them. I'm going to give you that straight up. Not necessarily at the tip of our tongue. However, we know where to get it. There's absolutely no question you can ask one of us on our side of the fence that we can't get you an answer rather quickly. So please feel free, give us a call. Let us help you through this. What do you think, Alan?
Sounds great to me.
All right. I again want to thank you very much. Is there anything? I'm sorry. I'm kind of winding up here a little quick for us, but I know Alan's got other things to do, and so do I. But is there anything you wanted to add that I didn't?
Probably the fact is that, I've been asked, what's going to happen with interest rates? Are rates going to stay this low? Are they going to stay long for a long period of time? One thing I'll share with the audience is that, we have a couple factors that are playing into the low interest rates. One being, you've got the Federal Reserve, who have been buying what are called mortgage-backed securities. They're bonds. They buy these mortgage-backed securities on the bond market. They're spending right now, and they have been since COVID in 2020. I believe it was in April sometime.
Yeah.
They've been purchasing on the number between $4 to $8 billion per day, 5 days a week, of mortgage-backed securities. So they've artificially compressed the market to be very desirable with low interest rates to keep that economy afloat. Unfortunately, we're starting to see some inflation. Inflation is the arch enemy of interest rates. So one of the bullets in the gun that the Federal Reserve has is to control high inflation, is to increase interest rates.
Right.
There's talk right now the Federal Reserve is starting to taper off their purchase of mortgage-backed securities. With that is going to come higher yields for more attraction to people to buy, or companies or whatever it may be to buy these mortgage-backed securities. That's coming, and they're already talking about that right now. We're waiting for that shoe to hit the floor, so to speak. And the other thing is inflation. We do have inflation. They like to keep those numbers under 2%. We've been floating between 3 and 4%. So they have to keep that in check. So we have a lot going on right now. So if you are looking to buy a home or even refinance, this is the time to do it right now. For the fact is, one, with appreciation with homes, of course, but two, if you've got a home and you have an interest rate that is in the high threes or even higher than that, mid to high threes or higher, I'd recommend definitely looking into refinancing. Rates are still in the high twos right now. We're seeing a lot more debt consolidation right now. That's been
Yes.
with a lot of people. Most people have equity in their house. They have 30% equity or more in their house. But if you haven't taken advantage of these low rates, do it now, because they are going to go away. There's no question. Now, we will still see rates stay low,
Yes.
maybe in the mid to high threes, but not the low twos or low
But if you're
high twos, low
if you're a
threes.
first-time buyer, there has never been a time where you can have equity a couple of months after you buy it.
Correct.
I mean, it's insane how fast it's growing. That's what got me excited. Remember I said I bought as a baby boomer in fact, I bought my first house now this is going to date me. Do I really want to do this? 1968. I sold that house 3 years later. It had grown 300%. My goodness, I was making about $650 a month, and I just made a bloody fortune. And I was like, it's where I belong. Real estate's my thing. You too can have that sort of thing. Maybe not 300%, but if you're a first-time buyer, really, this is the time. Interest rates are low. It's difficult to do because there's very little inventory. It's worth the struggle because you make so much.
Absolutely, and go along with it. It's so important to get a real estate agent that really knows what they're doing, whether it's on the listing side or the purchase side. Right
And
now,
who would that be?
There you go, Tim. Give you a call. But I recommend use someone with experience. It's a tough market right now. It's not for the faint of heart. I can assure you that. So,
but it's worth it. I'm
Absolutely.
really serious. I don't push people into deals. I let them find, in a normal market, you want to find the house that's perfect. One of the things I told my team was, look, if somebody has one, they say it's 8. If you have a scale from 1 to 10 and it's an 8, tell them to go ahead and write on it, secure it, because I'd hate to see them go a couple of months and now they're buying the 5 or the 6. Secure it. If you decide you don't like it, you have a few days, 10 to 17 days in this market to decide, you know what, that was a mistake, and you can get out and it won't cost you anything. But don't not buy. Just don't do it.
yeah, I agree with you. Thanks for having me on,
Right.
Tim.
Absolutely. Thank you, Alan.
You're welcome.
It's always a pleasure having you on.
Same here.
We'll do this again, I'm sure. It won't be next week because you just saw Alan. But
I've got a lot more information, a lot more things I could
Oh,
share.
yeah,
but anyway,
absolutely.
But glad to be part of it.
Absolutely. And like I said, we'll have you back frequently, especially if there's any changes in the market. We want an expert who knows that financial side. Again, it's Tim Lorenz. I'm with OC Housing Talk. That's our podcast. Elite Home Sales Team is the team. We're with Keller Williams. And Mike Van Ruth is standing behind the camera in case you're wondering where he is this week. All right. Thank you, everyone. Have a great week.